Hello, in this video, I'll teach you about the average directional index, also called ADX indicator day trading strategy used in trading stocks, forex and cryptocurrency. So stick around till the end of the video to understand. So before you go to the strategy, as always, you have to know the basics about this indicator. The ADX indicator is used to determine the strength of a trend, whether in a trading or non-trading phase. In other terms, it's a trend strength indicator. This technical analysis tool is used to spot formation of powerful downtrends and uptrend signals. It is sometimes confused with the DMI, which is a directional movement index, but they are quite different depending on their parameters and functions. So in this video, we'll talk about the ADX strategy only. You can watch my next video on the DMI indicator strategy to understand more about it. The ADX must be studied and interpreted with extreme caution. The key point to keep in mind is that it does not function as a bullish or bearish indicator. The moving average of the ADX simply indicates the strength of the trend. We can take an example on the chart below. When the ADX indicator is high, the trend is very strong, whether bearish or bullish. When the ADX is low, the market is somehow ranging or moving slowly as observed. ADX is plotted as a single line with values ranging from a low of 0 to a high of 100. The default setting is 14 bars, although other time periods can be used depending with the trader's preferences. To make you understand more about this indicator, we need to be able to identify how strong or weak the strength of a trend is. This can be achieved by the ADX values, which are crucial in determining if a condition is trending or not. ADX readings of 0 to 25 represents absent or weak trend. ADX values of 25 to 50 represents strong trends. ADX value of 50 to 75 represents very strong trends. And lastly, ADX value of 75 to 100 represents extremely strong trends. Low ADX value is usually a sign of accumulation or distribution in the market. When ADX is below 25 for more than 30 bars, price will mostly start to range and price patterns are often easier to identify. Price then moves up and down between support and resistance to find buying and selling opportunities. From low ADX condition, price will eventually break out into a trend. Like on this chart, the price moves from a low ADX price channel to an uptrend with strong ADX. A common misunderstanding is that a falling ADX line indicates a trend reversal. A dropping ADX line merely indicates that the trend strength is weakening, not that the trend is reversing, unless a price climax has occurred. It's preferable to think of a declining ADX line as simply less strong as long as ADX is above 25. The ADX indicator clearly shows when a trend is gaining or losing momentum. An increase in trend momentum is indicated by a series of higher ADX peaks. A sequence of weaker ADX peaks indicates that the trend momentum is fading. Even if it is a small peak, every ADX peak above 25 is deemed powerful. In an uptrend, price can still rise on decreasing ADX momentum because overhead supply is eaten up as the trend progresses. ADX can also show momentum divergence. When price makes a higher high and ADX makes a lower high, this is called negative divergence or non-conformation. In general, divergence is not a signal for a reversal, but this gives us a warning that trend momentum is changing. It may be appropriate to tighten the stop loss or take partial profits from the market. Anytime we notice trend changes, it means time to assess or manage our risk. Divergence can lead to trend continuation, consolidation, correction, or reversal. To use this indicator, price is the key most important signal on the chart. Read price first and then read ADX indicator in the context of what price is doing. Our first strategy with the ADX will be the pullback ADX trading strategy. We take trades on a pullback when the ADX is showing strong trend momentum. For example, on the chart below, we can see the ADX is above 25 and this shows the momentum is high on the uptrend because market is making higher highs and higher lows. We wait for a pullback and we take a long position, putting our stop loss just below the recent swing low point and target a 1 to 2 risk to reward ratio. To take a short position, we can wait for the market to start trending down, making lower highs and lower lows. When the momentum increases, which can be confirmed by the ADX being above 25 value mark, we take our trade after a pullback, putting our stop loss just above the recent swing lower high area. The second strategy we will use is what we call the ADX breakout strategy. As traders, we know the best trends rise out of periods of price range or consolidation. Breakouts from a range occur when there is a disagreement between the buyers and sellers on price, which affects the balance of supply and demand. Whether it is more supply than demand or more demand than supply, it is the difference that creates price momentum. Breakouts are not hard to identify, but the challenge too many traders face is that they mostly fail to progress or end up being a trap. However, ADX tells you when breakouts are valid by showing when ADX is strong enough for price to trend after the breakout. When ADX rises from below 25 to above 25, price is strong enough to continue in the direction of the breakout. For example, on this chart, you can observe the market was consolidating and the ADX was below 25 value mark. We wait for the market to break out of the consolidation area, and when ADX rises above 25, it confirms that the breakout is strong and will continue. We take our trade, putting our stop loss just below this area and target a 1 to 2 risk to reward ratio. Our last strategy with this indicator will be more reliable because we will add the 50 exponential moving average. The idea is that because this indicator only shows us the strength or momentum of a trend only, the EMA will tell us about the direction of the trend. When we combine the two, we get more reliable trading opportunities. Like on the chart below, we can observe the market is above 50 EMA, meaning the market is in an uptrend direction. The ADX indicator is above 25, meaning the trend is strong, so we take a long position, putting our stop loss just below the recent swing point and target a 1 to 2 risk to reward ratio. To take a short position, we wait for the market to be below 50 EMA, which indicates the market is in a downtrend. When the ADX rises above 25, this indicates the downtrend momentum is high, giving us an opportunity to enter into a trade. We put our stop loss just above this recent swing area, targeting a 1 to 2 risk to reward ratio. The ADX not only identifies trending conditions, it helps the trader to find the strongest trends to trade. The ability to quantify trend strength is a major edge for traders to be more profitable in the market by letting their trades to run. ADX also identifies range conditions, so a trader won't get stuck trying to trade in sideways market, and this gives you an opportunity to exit the market and take your profits. Watch my next video on the unbalanced volume indicator trading strategy that top traders use to get more profitable in a trading journey. If this video has been helpful, remember to like, share, and subscribe to the channel for more future content like this. Till next time, see you.